Hi everyone, let's go through all my scenarios including potential trading setups, starting with the macro bearish scenario where I'm looking for a 1, 2, 3, 4, 5 followed by a WXY. Now the Y targets will be below 13k, and what I don't really like about this scenario is that this wave 4 is very short in time compared to this wave 2 over here. Usually a wave 4 is longer in time compared to wave 2, but as you can clearly see, this wave 4 is much shorter. If we then zoom in, we have a zigzag here in the W followed by an expanded flat in X, looking then for a 3-wave to the downside in Y. We also have reached basically the support resistance area over here that we had over the years with a weekly order block in there as well, and one of the minimum targets usually for a wave X, the 0.382 and 29.6k. The potential trading setup over here would be to ladder these shorts in this area, stop loss safely above, and then trading it to the downside for potentially a wave Y. If we then look at the bullish scenario, then we have a 1, 2, 3, 4, 5 over here, with the most common targets for a wave 5 being between 98 and 174k. In this particular scenario, the all-time high is the high of wave 3 and the move down of 4 is a WXYXZ, which I will show on the lower time frames. Wave 4 bounced perfectly on the 0.5 fib, taken from the low of 2 to the high of 3. It also bounced exactly with the week low on the 0.618 fib time. Very nice confluence, and we also had a volume peak at the lows, which can signal a reversal area, just like it did over here with the low of this wave 2, which can be very interesting. The, let's say, less likely target for a wave 5 is the yellow box below between the all-time high and 98k. If we then go to the daily time frame, which for me is the high time frame counts, I start with the bearish one, where we're looking then for a WXY. So here we have a W in red, X, and then eventually Y to the downside. Inside of this wave X, we then have an expanded flat, which is an A, B, and then an impulsive C to the upside in 5 waves, which for me is a 1, 2, 3, 4, and then over here being 5. Now looking at this scenario, wave 5 most common target is between the 1.236 and the 1.618, and currently price has been ranging in here for many days. We are also inside the most common wave C target, which is important. So basically we're in the wave 5 target but also in the wave C target for extra confluence. Then over here, the 0.382 is the 0.382 matching wave X, which is pulled from the all-time high to the low of wave W, which usually for a wave X is a minimum target at 29.6k. Also in very nice confluence with the 1.618, which also sits at 29.6k. So in this particular scenario, the potential trading setup is to enter the shorts in this area, stop loss safely above, trading it to the downside. Now the reason for me that the stop loss is above 34k is, well, wave 3 over here is extended. You don't expect wave 5 to be extended if wave 3 is extended. So 34k should be a level that shouldn't be hit if this impulse, if this is wave 5 basically. And if wave 5 ended over here and this is a 1, 2, and then another potential 1, 2, yeah, it could be reached. But in this particular scenario, lower prices would be expected and the 34k wouldn't be reached anytime soon. If we then go to the more bullish scenario, then we're looking for this to be a WXYXZ with wave X just missing out on hitting the 382, which is possible. It's rare, but it is definitely possible. Wave Z ending here on the rare target for wave Z, the 0.618. But as we know from the macro count, this is also where the 0.5 fib is for the wave 4 for then more upside. Now over here, what would be nice is that this is wave 1, 2, 3, 4, 5, and then the yellow wave 1 is ending over here in the support resistance area as well. And then the potential short area is entering the shorts over here and then trading it to the downside in a wave 2. Now the most common fibs for wave 2 are between the 0.5 and the 0.786, which is currently basically between 21.1k and 17.7k, and especially the golden pocket is usually by far the most common target, which also has nice confluence with this wave 4 for maybe a liquidity grab before moving to the upside. And then the potential long setup over here, entering the longs in this area, stop loss safely above, and then trading it to the upside. And what I think would also be very nice is, look, now we are reaching like 30k levels, or we're dropping, that doesn't really matter, but we've been close to 30k levels. So people are probably thinking, oh, we changed market structure, took this high, reaching 30Ks, you know, oh, the moon is the next target. And what I like to always think is, what is the best wrecked scenario? Like, what is going to wreck the most people? Because in the end, the markets, you know, most people lose. So usually the markets are not very given to like retail traders. They don't be like, oh yeah, look, all the retail traders are buying. So we just let price move to the upside and make them profit with us as well. Usually that's not really how it works, right? So because then many more people would win. So what I think would be a very interesting scenario is that many people have most likely been buying here, approaching 30K, thinking, hey, we're going to continue to the upside. But then price can fall to the downside and not find support over here somewhere, but actually below this low. Because if price would move below this low, then you also again have the people talking about, hey, market structure changed, we took the low, we're going down further, everyone's selling, panic selling and whatnot. And then this is the area where then the potential buys are coming from the market makers and the bigger markets as well, for then a move to the upside, where then the people that bought here are selling here, and then they're missing out to move to the upside. You know, so that's currently my train of thought with this particular scenario as well. And if we go to the very, very bullish medium time frame scenario, this one is incredibly unlikely in my opinion, where this is then the high of wave 1, low of wave 2. Wave 2 is very, very short in time, which already is very unlikely. It's about 23.6% of time compared to the time it took to form wave 1, which is very, very short for a wave 2. Then over here we have another 1, 2, 1, 2, and we want to see price move to the upside, but instead, as you can see, price is moving to the downside. So very unlikely indeed. Also, volume is not really on our side for this particular scenario, as it has been going down and down and down and down. And also, there's basically three rare things going on. First of all, wave 2 is very short. This wave 2 only reached the 382, which is a rare target, and also this wave 2, the blue one, also only reached the rare target. So this is definitely not my preferred scenario, but instead this one is. So we have wave 4 down here, wave 5 over here, and this is an extended wave 1, followed then by a wave 2, where if wave 1 is extended, the most common targets for a wave 2 is between the 0.236 and the 0.382. Wave 3 does not have any particular target in this scenario. Wave 4, most common target between the 236 and the 382 if wave 1 is extended, so very, very nicely respected. And then the wave 5, most common target is between the 0.618 and the 0.786, which is basically between 28.9K and 30.5K. And what I really like, as mentioned in many videos by now, that over here, this wick entered this target area, and that is also the beginning where if one is a Elliott Wave trader, for example, usually you ladder into positions and then you would ladder potential short positions in this area, stop loss safely above for a trade to the downside, and as it stands now, one would be in profit. So that's actually quite interesting. So yeah, with this wick over here, wave 5 could definitely be finished, as I will show you on the lower time frames as well. And it took the double top that we made over here for extra liquidity, because if I remove this and I zoom in just a little bit, you can see that over here we had a double top. Let's make this a key. So we had a double high, so we had a high over here and a high over here for extra liquidity. Basically in this range, what has happened is we first took the double bottom, we had two lows over here, took the double bottom. This was a trade setup in one of my previous videos, trading it to the long side, where I said the double top over here is the main target, taking the double top, longs closed, and this is the area where one then wants to trade the short side, where that's basically this particular scenario. As you can see, the trading setup is still on the chart, where you're looking for the double top, and that is going to be the entry, stop loss safely above, trading it to the downside, because this is where the liquidity is resting. This is where people, these are the early shorters, basically. These are the people that go into short positions, stop loss above, want to maybe trade it to the downside. But yeah, everyone is now stopped out, liquidity is taken, and then that is the potential to then move to the downside. So usually price always comes back to take these type of double tops or double bottoms. If we then go to at least one by one through my low time frame scenarios, this is the bullish scenario, which is basically the same, but zoomed in a little bit. You see that this then is a WXY in the second 2, and this should be a wave 1, followed now by a wave 2, and then eventually a 3 to the upside. So for the bulls, you definitely don't want to see these lows taken over here, because in my opinion, this whole scenario can then go in the bin and much deeper prices are expected. If we can go to this scenario over here, I don't think this scenario is very likely, to be honest. This wave 5 ending over here instead of ending over here is a little bit odd, but it's mainly just showing the range, which I think is more important. So having a 3 wave over here, like you can see this in this scenario, this is basically a W and X and then looking for a Y before a bounce up again. Again, it's more likely that we find downside at the moment as it stands, looking at the structure that we've been creating. But this was the area for then the double lows over here, the double tops to be taken, for then a move to the upside towards the double top, for then a move to the downside. Very interesting. Over here, wave 5 is already finished. So in this particular scenario, we have wave 3 finishing over here, 4 finishing over here, and then an expanded flat, a zigzag, and then another 3-wave structure, which then is another zigzag type of structure over here, for then ending wave 4, and then eventually an impulsive move to the upside to finish wave 5, perfectly ending inside this target area for a wave 5 as well, with the wick, which is fine, and also taking the liquidity above these highs, for then over here possibly having a 1-2 setup. So if I zoom into the 1 hour, and this is also currently quite likely, it's either an ABC or a 1-2, where in this scenario we then have a 1, 2, 3, 4, 5, followed by a zigzag 1, 2, zigzag 1, 2, a zigzag wave 2, I should say. And also John in the Discord group made a very low time frame micro count over here to show that the zigzag is nicely possible as well. So that's really cool. So this can be then a 1, 2, and then another 1, 2, and now we're basically moving to the downside, either impulsively, or this is a wave A followed by a wave B, and then looking for a wave C before then a bounce to the upside. But in this particular scenario, it's an impulsive move. And if these lows are taken over here, for me, that would kind of confirm that we might be in an impulsive move to the downside, where if we're looking for targets, they are going to be much lower, of course. Because if you're looking for something like this, where this is then not a WXY, well, in this scenario, it is a W, because it's still possible actually. So you then have a 3-wave W, expanded flat in X, and then you'd be looking for 3 waves in Y. But looking at this structure, it looks impulsively and not a 3-wave structure. So then this becomes more likely an ABC. So we have then an A over here, B, and then eventually looking for wave C, where the target is also inside this area. What is interesting though is this potential diagonal over here, wave 3. So this is then a 1, 2, 3, 4, 5 in a wave A or wave 1. And wave 3 is actually a little bit longer than wave 1, which is, following the official theory of Elliott Waves, is not allowed in a leading diagonal. Then it should be an expanding diagonal, which is very rare. So yeah, that is why one can have a little bit of confusion with this first part over here. Like, is this a wave 1? Can this be a wave A? Is this a 5-wave structure? Because wave 3 is longer than 1, which is very rare. But in this particular scenario and the previous one, this is indeed a 1 or an A. Things like that happen, especially in crypto, even though it's not too common. Then this is wave B, looking for C to the downside, where this is the most common target, and the potential trading setup with a very clear invalidation being below these lows is this one over here. However, looking at how prices is coming down, I like to wait and see if we are going to be impulsively moving to the downside over here, and this more bearish scenario might be still on the cards as well, where this is then going to be an impulsive move to the downside. So then it's either like the ABC or a 1, 2, and then a 3 to the downside. Currently with this scenario over here, we went very deep, and looking at my target boxes as well, we basically crossed through the target box overnight as well. So we had some bounces, which was actually very nice. Had some support over here, but then eventually with the big candle fell through the target box. And for me, this target box was the main support area for this particular scenario as well, where if one would have traded this to the upside, and then a potential ending diagonal type of move for a wave 5, like a 1, 2, 3, 4, 5, would make 5 very long though, but in this scenario that is the case, and this then being an A, B, C. Well, this was the main support. Now we're hanging around the 886 actually. If I do this, you can see it. We're right above the 886, but we've been there already for basically 4 hours now. And the longer you hang around an 886, the less likely it becomes you're going to get a bounce. Like if you really want to find support on the 886, the best case scenario is hitting it and then immediately move up. But in this case, we had 4 1-hour candles working on the 4th at the moment in this area, which is a little bit much in my opinion. So it can be quite likely wave 2 is hit. However, in a ABC, wave B still has the 886 as a target. So of course the official invalidation for a scenario like this is taking this low. That is the absolute official invalidation. So yeah, that being said, currently my feelings, if I had to at least like my bias, I suppose, would be either an impulsive move down or an ABC down over here. I do think it probably looks nicer. Like if this wave 5 wants to be some sort of an ending diagonal, this wave 5 is going to be very, very long and very, very stretched, because then you need to have something like this, right? Which makes wave 5 very long in time, also compared to wave 1, 2, 3, 4. So yeah, it might be best if this is the high of wave 5 and then move to the downside, even though we didn't have bearish CVD at the highs. Actually, that's not completely true, I suppose, because we did have a bit of bearish CVDs between not this high and this high, but actually what happened over here. And if we zoom into the CVD shortly, before then checking the news, because it's going to be probably a volatile week, over here, this was the area where we could see some bearish CVD as well. Between this high and these, we had CVD between this and then the lower highs. We're making lower highs over here, but as you can see, CVD was going higher, higher, higher. And if we then check the news for this week, we can see that there's quite some red high impact news coming this week as well. Basically Monday, Tuesday, we have on Wednesday, we have on Friday. So yeah, nothing, well, Thursday orange, but I only look at the red flags. I have no idea what all of this means. I only look at it because I know volatility might be coming. And if so, this is going to be a very volatile week, which would also possibly match with an impulsive move to the downside. Maybe, who knows? Could be very interesting. So yeah, that being said, I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.